Welcome, everyone. Happy New Year, and welcome to the January 2024 Hyperledger Financial Markets Mortgage Subgroup. Yes, I have been practicing how to say that. Hopefully, everyone had a great holiday and is ready to start fresh for a prosperous 2024. Before we get started, I'd like to express our appreciation to the Financial Markets Special Industry Group and the Hyperledger Foundation for their ongoing support and making this group possible. So why don't we go ahead and dive right in. As always, please note that this meeting is being recorded and under the umbrella of the Hyperledger Foundation. So we ask that everyone abide by the antitrust policy and the code of conduct. The antitrust policy states that we avoid discussions of company-specific pricing, products, and projects. We don't make negative remarks about other companies or products. And the code of conduct means that we treat each other with respect, never discriminate, and communicate constructively. We fully support Hyperledger's policy of openness, equity, and inclusion. Everyone's welcome to our meetings. This is an open forum for sharing ideas and having constructive discussion. So welcome. We'd also like to express our appreciation to Hyperledger members, and this slide shows the myriad of premier and general members, and this list seems to be growing every day. If you're new, welcome, and feel free to introduce yourself in the comments. And if there's anything specific you'd like to hear about or discuss, definitely let us know. But you're also free to lurk as well. So welcome again. Here's our agenda for today. We've already covered the introduction, and we'll go over some Hyperledger community information. We have a 2023 summary video, which highlights the different topics, speakers, and metrics for 2023. Then we'll focus on three key developments in 2023: tokenization of real-world assets, artificial intelligence, and emergence of blockchain ecosystems. We also always cover the slide in each meeting because we want to reinforce that we're all on the same blockchain journey, but we may be at different points along that path. This group is meant to help everyone on their blockchain journey and to demonstrate the feasibility of blockchain technology through mortgage industry use cases and define potential implementation paths for the mortgage industry. Did someone want to say something? I thought I heard someone interject. Okay, we will just keep going. And if anyone has any comments, definitely interrupt or say something in the chat. As I said, this is an open forum. The next several slides, I always mention for those that are new to the group and would like more Hyperledger information. This slide provides links to different resources for the Linux Foundation, Hyperledger Foundation, and other groups. And second from the bottom is the link to our subgroup wiki. So definitely feel free to take a look at that, and James is going to cover that as well. These are great resources, and we'll reference them during the course of this presentation. If you want access to these resources, you will need an LFID, and this slide walks you through it, and there's a quick video. You can also get a Hyperledger Fabric certification. And then there's free blockchain training through the Hyperledger group. This is how I got introduced to Hyperledger blockchain information, and these are fantastic trainings, so highly encourage these. So with that, we're going to just briefly go through the 2023 summary video and enjoy.
Hi, I am James Hendrick, Managing Director for Zventus and co-chair of the Hyperledger Mortgage Subgroup. 2023 is coming to an end and a new era is dawning before us. A year that has seen the convergence of transformative technologies spearheaded by artificial intelligence and driven by the revolutionary potential of blockchain. To show us the new developments in the world of blockchain and artificial intelligence in the mortgage industry, The mortgage industry subgroup of the Financial Market Special Interest Group has kept us in the loop with its monthly updates since November 2021.
Good morning, good afternoon. My name is Marvin Bantugan, and welcome everyone to the January, February, March, April, May, June, July, August, September, October, November 2023 Hyperledger Financial Markets Mortgage Subgroup meeting. Hey, that was a great video prepared by our marketing team. I think they did a fantastic job. So I definitely appreciate the efforts they put into that. Every time I take a look at this video, I'm really astounded at the amount of effort and information that we've been able to communicate and share with people throughout the year. So, James, anything you wanted to add on that video? You did a great narration.
Yeah, I love that video. It always makes me laugh whenever we do the January, February, March, April. But I got to tell you, I'm never used to hearing my own voice speaking back to me through the computer. So, but no, the video is a great recap of the highlights from last year and the different things we covered. We had a question in chat from Alan. The recordings are definitely available. You can access them directly from our wiki site, or it looks like Alma just dropped a link to the YouTube channel in there as well. And you can get any of the recordings going all the way back to 2021. So definitely take a look at them. And if you've got questions or if you'd like to know more information, feel free to reach out to us. I highly encourage going to the wiki, because you'll also be able to access the presentations that they did as well, in addition to the videos. So do take a look at those things, sign up for your free LFID, and you'll also get notifications of future meetings. As we continue to add curated articles each month to the site, you'll get notifications when those get added. And there's no cost. It just takes a couple of minutes to set up your ID. Let's go ahead and jump into the articles, Marvin.
Hi, I am James Hendrick, Managing Director.
There you go.
There we go. On to the next slide. So welcome everybody to 2024. We've actually been doing these presentations since 2021. So we do have quite a bit of information out there over the last couple of years. And personally, I found it to be a really interesting journey to see how much has changed in such short a time, relevant to both blockchain and AI. So kind of jumping into the mortgage industry blockchain updates that we do each month, I've got a couple articles that we've curated for you. You'll be able to find these on the wiki as well. This first one coming from Mayor Brown, it's really more of a legal update. So it's a little bit of a dry reading, but it focuses on the residential mortgage marketplace, specifically electronically originated mortgages, with a focus on e-HELOCs as you go through the article. The article initially opens up discussing the summer of 2022 and the Uniform Law Commission approving a set of amendments to the Uniform Commercial Code, which governs electronic payments. Well, shortly after that, as we all know, in the fall of 2022, we had the crypto winter hit, which left some major players just failing in that market. So it's really been a bit of a slow adoption for it, but the article really talks about the focus on HELOCs, specifically e-HELOCs, and breaks it down into three parts. The first part provides context regarding existing laws on electronic transfers known as UETA-1 and e-sign. They're two different electronic notes, e-notes from electronic home equity lines of credit, and describes the current approach for perfecting a security interest in a HELOC. The second part summarizes the 2022 UCC amendments. And then part three reviews the promises of blockchain in light of the UCC amendment and discusses both the benefits and the potential challenges. So, at a very high level, I'm sure as most of you know, the Immerse e-registry does not store e-notes. E-notes are stored in electronic vaults. And then the registry is the system by which the control of the e-note is both established and managed. E-HELOCs, like e-notes, depend on a registry system to manage them. However, as noted, since the Immerse e-registry does not currently have the functions to support e-HELOCs, the proposed UCC Article 12 is agnostic as to the specific technology used to meet this requirement, but it does highlight where blockchain may be able to deliver robust results at a minimal cost. Utilizing smart contracts can automatically enforce terms and conditions, trigger actions upon certain events, and reduce the need for intermediaries. Lastly, they provide a case study where they walk through a hypothetical example of how an ELOC would function on a blockchain utilizing controllable electronic records, or CERs. So excellent article to read through. It is a little time consuming, but it's got some great concepts on what the future of blockchain may hold for electronic payments and e-HELOCs. Marvin, let's move on to the next slide. So looking at how the banking system may change in 2024 and how blockchain may play a part in that, the article starts out with how blockchain can change the future of the banking system. Faster payments, distributed ledger, streamlining compliance, digital assets, self-sovereign identity. That's actually one of the topics I'm really in favor of. These are all topics we've talked about over the last couple of years. But one of the things that I thought was unique about this one is it starts talking about a multi-tier banking system where researchers envision blockchain networks allowing value and data to flow freely between next-gen financial institutions, payment providers, central banks, and individual users worldwide. This could give rise to a multi-tier model where small community banks plug into a global internet of value, transforming regional banking accessibility. It also describes other topics, including faster international payments. So an example of this is JP Morgan's instant payment, which is currently available across 75 countries. Talks about tokenized asset trading, supply chain financing, and even the concept of green mortgages. Or in other words, we all know that within real estate transactions today, we have a large carbon footprint through all of the documentation shipping and physical documents that are required. This article also includes use case scenarios for 5 of the topics that we just mentioned, some of them real world, like the JP Morgan example, and then others hypothetical. The next item comes out of the interest. As we've done these over the years, I've tried to provide you guys white papers, articles. We've had podcasts that we've referenced. You'll kind of get the feel today we're on a video kick. This one's actually a video. It's roughly about 7 minutes long, came out in December, hosted by Katie Jensen and brought to us by the National Mortgage Professionals. What it talks about is it's been a greater than a decade now since blockchain was first introduced. And as we can see, people are still struggling to understand what a decentralized ledger can do. The crypto market application of blockchain is greater than a $500 billion industry, yet mortgage is still not fully utilizing it. The interview includes discussions with Paul Campbell, the EVP of Lending at Quick Mortgage, Jeremy Yo, the RVP of Communications at American Land and Title. The thing I really want to highlight about this video is it presents more of a doubting perspective on blockchain adoption. Currently, in our current environment, there's accountability through mortgage lenders, through it's insurance regulated. There's a lot of physical entities that are involved, but in a future blockchain decentralized model, the question really comes is who's going to be held accountable when something goes wrong? So it's an ongoing debate. I think it's going to be ongoing for a while. Within the video, Jeremy definitely pushes that title insurance is still the best way to go, regardless of what backend that you're using. But looking to try and provide additional sources of media and information to this community relative to what's going on in the blockchain space. Marvin, let's move on to the next slide. So we're going to tap back into a little bit of AI right now. I thought this was a great article. A lot of people are still wondering, okay, what is AI? Is it tech hype? Is it going to be a game-changing opportunity for industries as we move forward? So as we saw last year, ChatGPT reached 100 million users in just 2 months. It became by far the largest growing app ever. What makes it different than previous AIs is its out-of-the-box accessibility. End users don't need to be educated in machine learning to interact with it. To quote the piece, the goal of this article is to help CEOs and their teams reflect on the value creation case of generative AI and how to start their journey. And it definitely delivers on this by discussing how generative AI is more than just a chatbot. It can classify, edit, summarize, it can answer questions, draft responses, it can even generate code. It talks about how it's different from previous AIs and kind of, walks you through the timeline of the last couple of years of how generative AI really came to fruition. It also covers, topics on using generative AI responsibly, fairness, intellectual property, privacy, security, reliability. As we look at emerging generative AI ecosystems and the value chain that it can provide, this article does cover those, from services, apps, model hubs, foundation models, cloud platforms, and even specialized hardware in order to support it. It discusses the potential impacts and benefits for software engineers, relationship managers, and even customer support as different examples of where AI is going to have an impact. And then finally, that's got a whole chapter at the very end on considerations for where to get started in an AI journey. So a very detailed article. I found it very educational. I highly recommend this. Marvin, if you pop us into the next slide. All of the articles that we've just mentioned, even the video that we went through, they are available here on our wiki page. For those of you that are maybe new to this wiki, I believe Alma already dropped a link into the chat, but there's a link at the bottom of this presentation as well. You'll see in the upper right-hand corner, there's information on the LFID and the links to go ahead and set that up. We do include our newest articles on the right-hand side. So everything that we've covered today, and in probably the last 2 or 3 presentations from last year, you'll find readily accessible on the right. And then over on the far left, you've got links to not only each of the previous meetings that we've done since 2021, but as you scroll down that list, you'll also have links to all of the previous articles that we've covered too. As you saw in the video, we have curated over 250 articles, mostly on blockchain, But we have started to incorporate AI into it as well, because these are, in the current environment, the two technologies that are apt to have the biggest impact, not just in the financial markets, but across numerous industries. So we have started to incorporate some AI items in here as well. But we do have a much larger list of curated items behind the scene that's available outside of the wiki. So if you're looking for information on those, feel free to reach out. Here in 2024, in the last month, we've added at least an additional 10 new articles to that list. Marvin, let's move on to the next slide. And actually, I'll pass it over to you for key developments from last year.
Thanks, James. That is just a wealth of information that you've compiled there, and it's available to everyone. So definitely, please feel free to go through that library of information. So although there were a myriad of technical developments in 2023 in blockchain, several developments really stood out. First is the emergence of tokenization as a key aspect of blockchain usage. Second, the advent of AI that James alluded to and how it can work in tandem with blockchain. And then last is the dawn of blockchain mortgage ecosystems. In the following slides, we'll discuss each of these developments. Okay. In the 2021 Fannie Mae Mortgage Lender Sentiment Survey, respondents were asked what the most appealing and least appealing uses of blockchain were. And the respondent in 2021 said that one of the least appealing uses of blockchain was tokenization. For those of you not familiar with tokenization, it refers to the process of issuing a blockchain token, specifically a security token, that digitally represents a real-world tradable asset. In many ways, it's similar to the traditional process of securitization, but with a digital twist. So in comparison to 2021, in 2023, tokenization of real-world assets is at the top of everyone's list, especially within financial services. Several of our speakers talked about the opportunity represented by tokenization, and several have already embarked on significant tokenization endeavors. Here's a clip from Peter Gaffney. He's the head of research at Security Token Advisors, and he joined us in April. So I'm going to go ahead and play the clip.
In the original Provenance white paper, it was quoted that originating loans and related products fully on-chain could yield anywhere from like 300 basis points to 500 basis points in savings. I think the numbers are probably close to that, let's say 2 to 3% mark. Even on one of these tests, they found 100 bips in savings on the first ever securitization fully on-chain here. It obviously quotes $30 billion potential savings in the annual $3 trillion securitization market. Capturing all that would be amazing, but even it's a very respectable amount of savings. The clients that we deal with, the size and the plans, even something like 30 bips would go a long way. And then even looking at publicly traded fund wrappers, a lot of ETFs and mutual funds are competing over, 5 basis point difference in their fees for customer business. So I think this is really where Provenance could shine. If they can prove out these savings, that will go a huge, huge way with the overarching market. In the original Provenance white paper, it was quoted that originating.
Sorry about that. Let me just get to the next slide. This is another clip from Peter Gaffney's discussion. I'm going to play this, and then we'll come back and talk about both of them.
Hey,
Yep.
Stephen Better here. Peter, quick question for you. Do you know of any established businesses right now that are sort of approaching the origination element here, pretty much establishing that mortgage purchasers' provenance, their financial credit profile on chain right now that allows for sort of later securitization or being able to speed up that process right now? Do you know of?
Yeah, no, great question, Stephen. It's not in this presentation, but so there's a couple of things that come to mind. Intain, Intain, they originally had like an administrative platform with Hyperledger actually, coincidentally, and I think they garnered something close to $6 billion in assets between a lot of their partners, M&T Bank, a few big names. But yeah, their whole thing was we wanted to manage the administration process of mortgages, mortgage-backed securities, related loans, and products, kind of fully on chain. They recently rolled out Intane Markets on an Avalanche subnet, and that's designed to be the end-to-end marketplace. So you could originate, you could service, you could distribute, and eventually you could trade, and just gain liquidity all in one place. So it just rolled out 2 months ago. I don't think we've seen a completed project on markets just yet. Admin is quite active, but markets is really kind of the golden goose in this case of what we want to see. So that's something, that's a built out platform, active, Intane, it's already operational. I would also add that to James's point earlier about a dumb token, I love that because it's true. In some cases, you don't want to just throw a token out there. A lot of times you need actionable data or something backing it that's going to stir activity or really make use of the blockchain in this case. So this company Invenium works to pretty much aggregate a lot of asset level data, which in this case could be loan docs, could be investor docs, could be tax assessments, could be valuations, could be any third-party data like that, and kind of stamp it on chain. So eventually when there is a token or when that asset gets securitized, tokenized, issued, it has kind of callable data trails that can make the life easier for anyone kind of managing, looking at it, doing appraisals, any audits, any accounting work, and things of that nature. So that's kind of like a mid-ground solution to your question, I would say.
Oh, okay. Do you know? So so Intane is how do you spell that again? You said
Intain.
Okay, and do you know if they're who are the participants? Is it it's a marketplace then, right? Do you
Yep, it's a marketplace there, and let me just pull it up real quick. I believe M&T Bank, M&T Trust is one of their original, and like WSFS or WISPIS was one of their original people. I could get the full list a bit later on. Jam FinTop was one of their backers and is pretty active in this. And I know that they've made other investments kind of in the space in a similar vein.
Okay, in the first clip, Peter cited really one of the seminal papers in blockchain and mortgage and one of the most impactful examples of tokenization of real world assets. That was the Provenance white paper where he talked about savings in excess of 100 basis points through the use of tokenization. During the course of 23, we also had several speakers talk about tokenization as well. Daniel Zega, he's a distributed ledger technology architect and has spoken at several Hyperledger events. Peter mentioned Intane. We had Sanjay Kumar Nishank, the COO from Intane, speak at one of our events as well. And then we also had Alok Sinha, the Chief Ecosystem Officer, and Gopal Anandan, the COO from Estaca Paza Mortgage, also spoke about tokenization in November. So there are a myriad of examples of tokenization within 2023. It really is one of the key developments. Other additional data that I want to let you guys know, Hamilton Lane, whose digitally native private equity share classes have accumulated almost 700 million in on-chain capital by the end of Q3 2023. That's up almost 520% year to date. JP Morgan is another one whose Onyx digital assets platform is projecting to save 20 million by the end of this year on about $1 trillion of tokenized repo volume. And then the digital assets platform from Goldman Sachs, the GSDAP, achieved 15 basis points in savings for its £1 million digital bond issuance. So we have links to all this information if you guys would like to follow up on those. But clearly, tokenization, one of the key developments in 2023.
Yep. Stephen Better.
We go to the next one. In addition to the examples we mentioned, let's see here. Another development that has gained momentum has been AI within blockchain. We had Devin Daly from True talk about AI and their use of AI in fraud detection, data extraction, automation, and loan decisioning. Let me play this clip and then we'll come back and talk to it as well. So how is AI being used with blockchain in the mortgage industry? Here are three specific examples that I've identified. The first one is Redfin and Zillow. I'm sure everyone has used one of those websites to do a property search. You enter your criteria for a home or property, and these websites generate a list based upon that criteria. By using a ChatGPT plugin, these websites can identify and suggest homes and communities that would not have been included in your search. So if you have a very definitive criteria, it will provide a more expansive population by taking your interest into consideration and potentially identifying a home or community that you didn't even consider. So I think this is a really interesting use of ChatGPT. There's also Big Purple Dot. They are a mortgage real estate customer relationship management solution, and they've integrated ChatGPT into its marketing platform. This allows ChatGPT to interact and streamline the sales process by using natural language processing. In other words, their AI assistant understands questions from clients and responds in a more human-like fashion. So as one of the things that James mentioned was using AI to provide quick, accurate responses to queries. And this is exactly what BPD has done. They could provide quick, accurate responses to clients so that loan officers, real estate agents, and recruiters can spend more time building relationships and closing more deals. I haven't actually seen this, but I've reached out to Big Purple Dot to get a demo, and I'll see if I can get them to attend one of our future sessions. Our last example is a company called Intane. Intane is a blockchain-enabled structured finance platform. They use AI and blockchain to provide an automatic integrated solution to connect all interested parties involved in a structured finance. So this includes issuers, underwriters, verification agents, auditors, servicers, and so on. So starting with servicing conventional loan securitizations, Intane partnered with WSF, the fourth biggest trustee in the MBS environment in 2020. Currently, more than $6 billion in assets have been administered using their Intane admin tool. So I think this one is really interesting. I hadn't heard of this one before, but this is really interesting, and I'm sure people in capital markets would be interested in taking a look at that or researching it. So as I mentioned, we did have Intane speak at our July meeting where they talked about how they use AI for loan pool data verification and data provenance. In the examples that I mentioned in that clip, AI is being used not only for customer service, but fraud detection, data extraction, and automation, and loan decisioning. James mentioned in the article before as well that AI is being used for code development. So a myriad facets of AI, or a myriad of uses AI being used within blockchain. So how is AI being used with blockchain in the mortgage industry? I keep pressing the wrong button. And you know what? I practice that too. Okay. So in another development that has started to gain momentum is the emergence of the blockchain mortgage ecosystem. Earlier in the life cycle of mortgage technology, blockchain technology, applications were primarily point solutions where companies identified a single business process for the application of blockchain. However, it became evident that the true value of blockchain comes in the use of blockchain across the entire mortgage ecosystem. And these companies have been bringing their solutions to the marketplace. And some of them have presented to our group in 2023. In this clip, Alok Gopal, the Chief Ecosystem Officer, and Gopal Anandan, COO of Estaca Paza, walked us through their mortgage ecosystem in November. Let me play the clip and we'll come back and talk to it.
And everyone remembers the 2008 market crash, right? Remember, $19.2 trillion of household wealth evaporated. And the net reaction that the government had was 2,000 pages, and I'm sure every one of us remember, 2,000 pages of new regulations and covenants and whatnot, right? They actually injected inefficiency intentionally because they wanted to reduce the speed at which this was going, and there is a reason why. And next slide we'll talk about that reason. But and when we looked at this, and in fact we came into the HME because of the fact that one of our customers was selling it. It's a correspondent lender which is doing roughly $1 billion a year. Was selling their loans to a number of investors, and it would take anywhere between 14 days to 28 days to transfer the loan. And obviously, right, the loans, the closing documents, there are a bunch of 50 docs which are in a PDF form, which are amenable to alteration and change. And so when it is sold to the investor goes through all the checks once again, thereby taking so much of time, right? And I'll talk about it in a second. So that's how it began. And we realized that this cannot be solved in pieces. So, there has to be a new way. It has to be holistic. It has to be end to end. And it has to also do, at least look at the intent why the government intentionally introduced inefficiency to reduce the speed of operation. Next slide, please. And that's the reason. I mean, look at this. This is the reason, right? The total end-to-end is roughly between 13 and 14 trillion dollars. That's 65% of United States GDP, right? And there's no chance for the government to allow this to be, played around with. Remember the 2008, and remember 2008 actually crashed the GDP too, and that was the reason. I mean, 65% of a country's GDP is quite a lot, right? And that's the reason. So how do we do that? And that's what we will show you today. So the core of the platform is Hyperledger, and I'm proud to say I'm part of this, and I'm a new member to your subgroup, but I'm proud to say this is a very powerful and a very important piece that we've done. Now we've used, it's not only the permission platform that we have used, but we've also used the public side, the Ethereum and the Polygon, but very, 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 very differently. So remember, no banker, no institution will accept movement of anything in mass scale. I mean, there are experiments going around, and we're working with a lot of people, including some of the top names. But they will not allow pieces to move on the public chain. So we have actually made the public chain more safe. We made it safer by using Hyperledger, and we'll show you how we are doing it. So the Hyperledger actually makes the chain much safer than what it is at the moment. So just to give you a quick snapshot of what we are able to do, basically take out 250 bips end to end. And we'll talk about how the cash flows get disrupted. So on a 13 trillion, and I'm not saying everyone will be on a platform, but I'm saying the blockchain can actually unravel between 25 and 60 days of cash flow from this 13 trillion which is flowing in the system. Now that's a huge amount of money, right? Huge amount, and that's a huge amount of impact. Right? And there are some other pieces there. There are pieces like, and this is Fannie data. For example, only 18% of the borrowers go back to the same lender. So 82% actually filter away at each stage, right? And that's a big loss. So is there a way you can retain? Because if you can retain, you can suddenly increase the top line by 50%. And, those are the pieces. And remember, a house gets refinanced once every 3.5 years. Now, that's Black Knight data, which means at least 8 times during the life cycle of the loan. Now, think about it. Only 18% stay back. Think about if each iteration, the borrower goes to the same lender. If you can do something like that, look at the amount of money and look at the amount of cost that you're reducing from the entire piece, right? And that's what, we'll talk about.
Alok made a very compelling argument for how a mortgage ecosystem is more efficient, especially in light of the inefficiencies introduced into the mortgage process because of regulatory requirements. At the end, he mentioned potentially taking out 250 basis points of inefficiencies, improving cash flow by 25 to 60 days. And those are some really compelling numbers. We have one more clip from a look. Let me see if I can get to that one. And then we'll come back and wrap it up. Oops. My fingers are going crazy. Here we go.
And this is the architecture. So whatever I have spoken about, 1, 3, and 5, the upper part of 5, this is what the Hyperledger blockchain is. So, you look at borrower chain, we have all the documents on chain, everything, including the rate lock, is on chain. These are then given to the investors. They buy on the basis of this. There are other things like, you can do advanced bidding on the loans, just like the MCT. They have a marketplace. We have created a DLT marketplace. So the loans are available much before. So these are for smaller brokers who are selling smaller parcels of loans. That's available. And that goes to investment bankers. And then there is securitization where you do the selection, due diligence, rating, and securitization. That's what we talked about. But here are 2 other pieces that we do. And this is basically going across to the public chain. We use Ethereum and we use Polygon Matic. Now there are 2 pieces why we do that. Remember, we said that 18% of borrowers return to the same lender, right? So this is a borrower retention technique. So we charge a certain number of bips for every participant over here, right? And out of the bips that we charge, 20% of whatever we charge. So these bips are charged in fiat currency, but we mint our tokens called PASA tokens. We just went live with PASAs about last Sunday. The first PASA was minted. First 500 million PASAs were minted. So we went live with that. Now, these PASA tokens are then given to the borrowers, and these tokens are then staked between the borrower and the lender with a promissory that if you come back to the same lender for a refinance or any other transaction, you'll get anywhere between 50 bips to $5,000, whichever, whatever is the agreement between them, which can be set off against closing costs, right? So this is a mechanism that we are using to retain the borrowers, and so basically reducing the friction. The second part that we are doing is also minting a real world asset loan NFT. Remember, homes cannot be tokenized. When you tokenize, you basically, when you sell the token, you sell the inherent, the underlying asset also with it. But I think other than only two countries, Liechtenstein and Switzerland, a sale of a digital token does not entail sale of a physical asset. Okay, US definitely not. You need a promissory, right? Or any other country in the world doesn't. Definitely not. But think about loan. Loan is unique on a home, right? It's a digital asset, and look at how it moves. It moves from when the loan is created, it's an asset for the correspondent lender. Then it moves to the investor. Then it moves to the investment banker. Then it moves into fractionalized, right? So basically, what we are doing is we're creating a real-world asset here. We are creating a RWA NFT here. When it comes over here, where the loan gets converted into a pool, that's a NFT of NFT, and then it gets fractionalized into bonds. Okay, these are fungible bonds. Bonds are fungible between the pools, right? So it gets fractionalized with QSIPs, and that fractionalization occurs here. We do some other smart things over here. Basically, I talked about the fact that we use Hyperledger to make transactions on the public chain firmer, safer, right? And we use ZK rollup over here. We use ZK rollups, right? So for every bit of information or the document that's collected over here, we create a hash key, and at the instance when the loan is getting initiated, that's the ZK that we store on the public side. Remember, the public guys always come back and say, you can, this is a private chain, you can spoof. And to beat that, and by the way, so remember, the best way is to use the strengths of whatever is available, right? Weakness is very difficult to remove. Strengths, and that's what we've done. So as the loan process begins, the ZK rollup first, that's where we start rolling. And once the loan is completed, the loan process gets completed, so it's disbursed. All the document hash keys are stored in the Hyperledger last block, and that block hash key is stored in the public chain, right? So that's a classic ZK rollup we are doing. I mean, so you have a side chain. The side chain actually for us is the main chain, and that's what is storing all the documents, right? So that's one part. The other part, and I have time. I just 2 minutes more. The other part is on the servicing side. So remember why 2008 occurred, right? So there were loan pools. The pools had been converted into bonds. The bonds were converted into, CDO square, CLOs, whatever, right? And the moment a loan fell off the pool, because it was either refinanced or it was foreclosed or forbearance, whatever, by the time the bondholders figured out, it was anywhere between 6 to 8 months. CLO CDOs was worse, right? They were badly hit. But the direct bondholders, 6 to 8 months, right? Now, what we are doing is we have gamified this. So every time a borrower pays the loan, okay, and by the way, the payments don't go through our platform. We have yet not become a payment gateway. We don't want to become a payment gateway. And I'll come back in a second to what we want to be. So the moment the borrower pays, a part of it is updated into the loan NFT. And we have servicers. They basically are the validators. And once they validate, we do two things. One, we give tokens to the borrowers as well as to the servicers. But why should the servicers be validators? Because we update into the Immerse database, absolutely free of cost, the loan data, the payment detail, which means now we are able to get merely real-time data, okay? And so think about if you had 1 million bond holders on Hyperledger, we'd be, bleeding for infrastructure. So this is the place where we are allowing bondholders to be on the public side, and they're using zero-knowledge proof to access very specific pool data from the private side. We're not giving them a login access, but we are giving them a ZKP access to do this, right? Now, that's what it is. But
Okay. I misspoke earlier. It's Alok Sinha. He's the Chief Ecosystem Officer of Istakapaza. So my apologies for that. But he went through and he did a wonderful presentation on mortgage ecosystems utilizing blockchain. I know that in the chat there was a question about other examples of companies that are using AI and blockchain for loan decisioning. Um, One of the ones that I definitely want to mention is Angel.ai from SunWest Mortgage. We actually had Pavan Argawal, the CEO from SunWest Mortgage, speak in September about what they're doing with Angel.ai. So that's an excellent example. And in my personal opinion, one of the best examples of integration of AI and blockchain and using that for loan decisioning. Another example is a company called Sonar. We haven't had them in our group meeting yet, but they say that they are an integrated loan origination point of sale solution that spans the entire mortgage journey from application to closing. So if we can get more information from them, I'll see if they can join our group here. And then the last one that I want to mention that specifically talked about loan decisioning using AI and blockchain as well as True.ai. We had Devin Daly, the Chief Revenue Officer from True.ai, speak about how they use that technology. So those are some specific examples for you. I know we're kind of running towards the end of our time, so I did want to close it out by first, I want to get on my soapbox for a bit. And James, please bear with me, okay? I think that mortgage ecosystems are the logical evolution of the technology developments that we've been discussing. First, there was blockchain, then that led to tokenization. All the speakers on tokenization highlighted the benefits such as increased liquidity, reduced transaction costs, improved asset security. The next development was the integration of AI into blockchain. So this integration facilitates automation, data quality, and enhanced decisioning. And there were already questions about that. Then these solutions expanded from point solutions to solutions that span the entire mortgage ecosystem. As Alok mentioned in his presentation, blockchain mortgage ecosystems greatly expand the benefits that we've already identified. Now, what's the next step? And that's a question that I throw out to you guys. You don't have to answer this, but we'll try to address this in 2024. What's the next step in blockchain technology in the mortgage ecosystem? What are we going to see in 2024? James, anything you want to add to that?
Yeah, just a couple of topics to kind of address Alan's question in the chat. We did have 3 months, May, June, July last year, Alan, where we really focused on AI and blockchain. So highly recommend taking a look at those sessions. Marvin mentioned Devin Daly from True. He was in our June session. You heard Intane mentioned several times throughout today's presentation. They were actually our July presentation. And then we had Angel AI and Pavan. I think it was in the September timeframe. Also take a look at the articles that we curated for those months. You'll find those on the wiki. You're going to find AI and blockchain articles related in there. And then, if you're still looking for additional at the end of this presentation or on the wiki, you'll see Marvin's and my contact information. Feel free to reach out. More than happy to share with you the other curated articles that we have done as well. One of the other things that I wanted to mention is we looked at, we talked a lot about tokenization. We had a big focus on tokenization in March and April. And then, as you saw Luke talking about it as well. Smart contracts, I think, is also one of those keys when we look at tokenization. So if you're not familiar with smart contracts, highly recommend, taking a look at those, starting to learn some additional information. as we look at the, ecosystem, we had some great sessions on the ecosystem, not only the one with Istakapaza. We also, Marvin, had your presentation in August of No Blockchain to Rule Them All, which was, just a fantastic presentation. So for those of you that are new to this group, even though this is supported by Hyperledger, we are very technology agnostic. So we are not pushing Hyperledger as the solution, but we are pushing the concepts of blockchain, and now we're incorporating AI in it as well. So yeah, definitely take a look at those other articles. We also had some other great presentations. We talked about the Mismos white paper. So they have a blockchain community of practice. They produced a white paper back in the summer. We actually did an entire session just on that. We're looking to see if we can maybe get somebody from that group to come in this year. As Marvin mentioned, Sonar's recently been on our radar. And so we're interested in seeing if we can get them to come as well. So check out the wiki for these topics and others, as well as, previous years and previous research. And we're looking forward to the exciting topics and speakers that we're going to be bringing you here in 2024.
Thanks, James. I also want to mention, I followed the ongoing webinar that's titled Blockchain Won't Save the World, which I highly recommend. They just had Charles Hoskin talking about the future of blockchain and crypto. And if you don't know who Charles Hoskin is, he's one of the pioneers of crypto, and he's been involved in the creation of 3 of the most widely used cryptos: Bitcoin, Ethereum, and Cardano. Charles mentioned hybrid ledgers and interoperability. Those are some key topics that we'll definitely explore in 2024 as well. And those are things that we've spoken to in the past. So those are just some of the future agenda topics. And since we're at the end of our time now, if anyone has any questions, please feel free. If you don't want to speak now, just want to shoot us an email, definitely open to that as well. But again, this is to educate everyone, and also just to further the discussion around blockchain within mortgage. So with that, any questions or comments from people? We do have a couple minutes. Okay, if there aren't any questions or comments, let's just go ahead and wrap it up. Thank you, everyone, for joining us. We think this is going to be a fantastic year in 2024. There's a lot of interesting information, and hopefully this will be beneficial to everyone and allow us all to prosper in 2024. Thanks, guys. See you next time.